Hey guys, welcome to another episode of Shit Happens. Today on my YouTube channel, Cashflow Talk, today I have Jose Ramirez. He's a tax strategist for investors, and his company name is Advanced Tax Advisors. We're here in Broward, Florida in his office. And we just finished recording an episode for Dealmakers. So if you go want to check it out, we talk about his journey and some tips and strategies that you can save money on taxes when you're filing taxes for as an investor. And if you should open different LLCs for every property that you have and different tips and strategies. But today on this Shit Happens episode, we're going to talk about one of your clients that left $60,000 within 6 years on the table because he didn't use that one strategy. Jose, thank you so much for being with me on today. How are you?
No, good. Thank you for having me.
Awesome.
Excellent.
So this guy is an expert in real estate, like I said before. Tell me a little bit about what happened. Give me the backstory a little bit, and most importantly, what can we learn from it?
You know? Yeah, I mean, right now I'm in the process of fixing the issue, the mistake. I have a client who owns several real estate rentals, and he went to the wrong guy, mom and pop shop or small tax shop that didn't understand the intricacies of real estate and did not depreciate the property correctly. So 6 years of not taking depreciation on your rentals, you take a hit. I mean, you're not taking advantage of the depreciation advantage. So now we're doing, when that happens, you can't really amend and correct the issue. You have to do what's called a catch-up depreciation adjustment via an accounting method change. It's a complicated process. You have to do a depreciation analysis, take what should have been taken versus what was taken, do an adjustment, and report it to the IRS, and fix it that way, right? So $60,000. Let's just assume it's about $60,000 in catch-up depreciation. Let's say that the landlord is at a 24% tax bracket. So you do the math. You're what is that? That's 12, maybe $16,000, $18,000 in taxes, right? So that's something that he left on the table that he's going to get back this year by fixing it.
That's amazing, guys. I was mentioning on my previous videos, whatever business you're in, you can cut corners here and there to save money and save expenses, but not when it comes to insurance or taxes. That's at least in my opinion. When taxes and insurance for me is a topic that I don't enjoy too much. Not many people enjoy it, so I'd rather spend a little bit more money and hire the right person, hire the right accountant and the insurance person that I can have their cell phone number, guys. It's so important that if I have a question when I'm doing my QuickBooks or if I'm opening a partnership with somebody else, I can call these guys and say, hey, can I do this? Can I do that? When I was buying my house, I had the mortgage lender qualify me, and he was communicating himself with my accountant so we can qualify for the right property. I had the property already in my mind. And those are the benefits of working with somebody that knows what they're doing. Right. And that's why I have this guy on today. This guy's an expert in taxes, especially for real estate investors. So, hey man, that was a great lesson. So what can we learn from it? What can we, so that it doesn't happen again?
Yeah, you want to make sure that, you're taking your depreciation on the yearly basis if you're a landlord. The disadvantage of not taking the depreciation when you're supposed to is not only that you're missing out. Number one, you're missing out on the tax benefit of taking depreciation. Number two is that if you ever sell the property, the IRS is not going to care that you did not take depreciation. They're going to recapture the depreciation that should have been taken when you do sell the property. So you're doubly,
you're getting hit twice.
You're doubly screwed, basically. You're missing out the deduction, and you're getting taxed on the recapture. So you wanna consider all those factors when working with a professional. Make sure that they understand depreciation. Make sure that they understand real estate, and avoid doing having these mistakes done.
Awesome. We talked in the previous video, but I'm gonna ask you the same question again because it follows within the conversation. I'm a real estate investor, or I'm an entrepreneur, and I'm filing taxes. What are the key questions that I should ask when I'm interviewing to hire or to contract my tax person across the desk? What are the top questions that I should ask so that I know if that's the right guy or not? or girl, obviously.
Yeah, I mean, for real estate investors, it's going to be a little different than most, because real estate is a different animal in itself. It's a different industry. It's a complex industry. The assets make it a little bit more complex. The depreciation, the accelerated depreciation, the many different time periods of depreciation, timelines of depreciation. So I would ask him the question: are you familiar with real estate? Do you understand what a cost segregation analysis is? Do you understand what accelerated depreciation is? Have you done these before? Do you do any tax planning? Can you recommend any tax planning strategies that we can implement this year? Those are the questions that I would ask. I mean, if you're just going to prepare, if you're a business owner, you should not just be going to prepare. Anybody can fill out a form. You want to go to a strategist. You want to be working with somebody that understands the tax code and can help you save in taxes.
Yeah, absolutely. Hey, a quick question that I would just ask: do you own real estate? Do you have a property? Do you own where you live? Do you depreciate the assets that you have yourself? My accountant has real estate investments. He has real estate investments. So guys, make sure you follow these guidelines so that you hire the right person, because what I was telling him is one simple strategy can save you a ton of money. Or one simple strategy can save you a lot of money and a lot of headaches as well. Time is money, and that's obvious.
Absolutely.
All right.
Instead of paying, I was just going to say, instead of paying the IRS, take that money that you were going to pay the IRS and put a down payment on another property.
Exactly.
I mean, these are strategies that we implement all the time.
Exactly. Hey man, so what can we implement so that this depreciation happens the right way? Guys, I say it all the time. Like, it's one of the main benefits for buying rental properties. If you're buying rental properties, one is the cash flow. Obviously, you have to make it profitable. But number two is tax depreciation. Like, how can somebody not think about tax depreciation when they have rental properties and they're doing their taxes, right?
Yeah, depreciation is a big deal.
Awesome. Yeah. Guys, don't forget to subscribe to the channel below. Follow this guy on social media. His Facebook is Jose A. Ramirez, and his Instagram is ramirez.jose.a. I have his handles over here. Guys, give me your contact information, your website. Sure. How can they contact you?
Yeah, my website is advancedtaxadvisors.net, and then my phone number is 954-888-6941. Best way to reach me is call or send me an email.
That's awesome, guys. Thank you guys so much for watching. We'll see you guys in the next Shit Happens episode, and thank you so much for your time, brother.
Thank you.
All right, take care. Bye-bye.
Bye.